Thank you so much, Nelta. Good morning, everyone. Welcome to Business Morning on Sunrise Daily. It's time to do about 30 minutes of business. We start from the global space. Oil prices extended last week's losses on Monday on concerns about slow demand in China, although lingering geopolitical risk surrounding the Middle East and Russia limited the decline. Brent futures fell 55 cents, that's about 0.7%. So we see that both Brent and WTI for the U.S. and for a country like Nigeria are down 0.7% each at $81. Last week we did about $83, but we start this week with $81.53 a barrel, while WTI has dropped also to $77.44 a barrel. Now let's look at the factors driving it. On Friday, job data from the U.S. came out and it showed growth accelerated in February, but a rise in the unemployment rate and moderation in wage gains kept an anticipated June interest rate cuts from the Federal Reserve on the table. Of course, the economic activities also reflect on the demand for oil. Then we go to China, where the economic growth target for 2024, about 5%. That's raised some dust early last week, and many analysts are calling that ambitious, without much stimulus. On the supply side, the Organization of Petroleum Exporting Countries, that's OPEC, and its allies, OPEC Plus, Russia is included there, have agreed this month to extend voluntary oil output, and we know that will squeeze demand and increase price. So those are the factors driving oil prices this morning. Going to the grain space, Chicago soybeans rose with the market climbing into its highest levels in almost 3 weeks on short covering, although expectations of ample South American supplies are likely to keep a lid on the prices. We've been discussing since last week. Let's look at the numbers right there. Wheat is down 0.1% at $5.37 a bushel. Soybeans is on the flip side, gained 0.3% at $11.87 for 3/4 of a bushel. It's been about $11 now for, I think, about 2 weeks. Talking about soybean. Corn, however, dropped 0.3% to $4.38 for half a bushel. Now let's see the drivers. Now the U.S. Department of Agriculture slightly lowered its forecast for Brazil's soybean crop further on Friday, but its outlook was above many private estimates. USDA, that's the U.S. Department of Agriculture, pegged Brazil's harvest at 155 million metric tons, compared with its February estimate of 156. And this is lower or higher than what analysts expected, about 152 million. The agency says that harvest results in the state of Pará and poor weather conditions in Sao Paulo were offset by favorable conditions. For wheat, the USDA, in its monthly report, lowered its forecast of 2023-2024 U.S. wheat exports to 710 million bushels from 725 million. Hefty global grain supplies and strong competition for export business dragged down corn and soybean prices to multi-year low late last month. But expectations of abundant supplies may have been factored into that. Now let's come to Nigeria and see some of the things happening and reactions. First of all, there's the Director General of the National Pension Commission, that's PENCOM, Mrs. Aisha Dahir Umar, has denied that that PENCOM is owing or was owing federal government retirees arrears of pensions, as well as insinuations that pension fund administrators, as PFAS, are not fulfilling their obligations to retirees with regards to access to their retirement savings. In a statement shared with the media, Mrs. Dahir Umaru emphasizes that apart from the fact that PENCOM is not a bank and does not warehouse or manage pension funds, the federal government did not take a loan of 10 trillion naira from the commission. She denied claims that PENCOM was owing federal government retirees arrears of pensions, as well as insinuations that pension fund administrator was not fulfilling their obligation. And according to her, investment by the PFAS is in securities of the federal government of Nigeria, and they are not loans, which has been erroneously portrayed, but investments in securities through bonds and treasury bills as approved by the relevant government agencies. Still in Nigeria, the Independent Petroleum Producers Group, IPPG, is happy with the recent executive order signed by the President Tinubu, aimed at revitalizing investments in Nigeria's oil and gas sector. Remember that reform was signed last week. The order, which includes the introduction of value-adding fiscal incentives for investments in upstream, non-associated gas development, midstream infrastructure, and deepwater assets, streamlining the industry's contracting process, are measures which, according to the group, are pivotal to the future of the industry and have been recommended by the industry for many years. IPPG believes when properly implemented, the measures will lead to reduced project costs, faster project execution timelines, reduction of waste, among other benefits. And still another reaction, the suspension of the expatriate employment levy, the EEL, has been receiving some positive responses. One of it is from the Chief Executive Officer of the Center for Promotion of Private Enterprises, Dr. Muda Yusuf, who believes that the gesture is a demonstration of the fact that the Tinubu administration is responsive, democratic, and inclusive in its governance process. Moving forward, the CPP highlights the National Content Act and the Presidential Executive Orders 3 and 5, which focuses on localization of procurement and service opportunities, as well as the extant laws and regulations within the framework of the Nigeria Immigration Act and the Expatriate Quota Handbook that squarely addresses the outcomes contemplated in the EEL. According to Dr. Yusuf, the next step should be to strengthen the institutional and regulatory effectiveness in the Ministry of Interior and Immigration Service to ensure compliance and enforcement, and not necessarily having a new law. Well, let's settle on that for a bit. And we have joining us to share his thoughts and findings, the Chief Executive Officer of Businessday, Mr. Frank Aibogun, joins us virtually from Lagos. Thank you so much for your time, Mr. Aibogun. Good morning.
Good morning.
So obviously, the president is receiving applause now because he has reacted. We've seen MAN discuss this. We've seen a lot of participants, especially in the private sector, talk about the EEL, and we see him responding. But we have to remember that it's a suspension and not that the EEL has been totally halted. So, but what do you think, apart from the fact that it's good that the president is listening and acting on it, what do you see? What are some of the sentiments around the EEL from your findings?
Well, thank you. I think from the get-go, the response to the levy was negative. It was stopped at a time that Nigeria was keen to promote inward investment flows. It wasn't the right time to begin to tinker with the cost of bringing personnel into the country by investors. Truth is, when you get capital into the country, often it comes with specialized skill, and that is just basic. And it was thought that the timing was really inauspicious, and thankfully the president has suspended it. We believe that the suspension is a first step to complete abrogation of the levy.
So what do you say to what Dr. Muda Yusuf says? He says that we already have laws that are taking care of this. We have the National Content Act. We have the Presidential Executive Orders 3 and 5. So perhaps this is already taken care of. Or do you think there should be a bit of an adjustment to existing laws, to help in this area that the president is concerned about?
I see absolutely no rationale for any additional law, as Dr. Yusuf has said. I also don't believe there is any motivating factor for tinkering with the existing laws. In fact, I think the existing laws are quite burdensome. And if you ask me, it is even taking out some of the existing laws rather than tinkering with them or increasing them. A better implementation. You recall, for instance, that one of the executive orders that you referred to earlier, which the president signed last week, relates to implementation of the Nigerian Local Content Act in the oil sector. It's been abused and has become a disincentive for investment. So the government or the president has rightfully adjusted that law to ensure that the implementation of the law is forthright, transparent, and that it delivers on the goals of Nigeria.
So do you think, Mr. Ibokun, that this speaks to perhaps some of the perspective that Nigeria does not lack the laws? It's actually the implementation of the law that should be the area to be looked at.
I think you're quite right. Nigeria doesn't lack adequate laws. It is in the implementation that we have consistently failed. So anything that government can do to ensure transparent, speedy implementation of existing laws will be useful in attracting further investment into the country.
On the other hand, would you say the country is doing enough to get skills in some of these really technical areas which expatriates are looked for? Would you say there's an intentionality, perhaps from the private sector, to get those skill sets?
I'm not exactly sure why there is this obsession with imported skills into the country. I don't see how that's a problem today. I look around and I don't see that problem. When you go to the big foreign companies in Nigeria, you're likely going to find that the foreign component of their staff is no more than 2-3%, sometimes even less. So I am at a loss as to how this has suddenly become priority for us in Nigeria. Yes, it is true, as Dr. Adeshina said last Thursday or Wednesday, that Nigeria should ensure improved educational facilities in-house so that our people don't go out. But most importantly, Nigeria should be going out to look for quality skill to bring to the country to speed up development.
All right, let's switch a bit and talk about this expectation from Goldman Sachs saying that in 12 months, they expect the Naira to go for 1,200, which obviously is an appreciation, compared to where we are at this moment. Do you agree with this, going by the trend that we see? I mean, we're going to do a trend of a movement last week, but do you see us here in 12 months? Is it even worth celebrating having a dollar go for 1,200 in 12 months?
I don't think it's worth celebrating. Let's dismiss that very quickly. But the other part, and which is perhaps the more important, is the fact that if you read the Goldman Sachs report completely, you would you'll find that many of these forecasts and expectations are contingent upon certain things happening. So we shouldn't clap when, as it is, we haven't done enough of the things that Goldman Sachs hopes, if we do, would lead to an appreciation of the Naira. But also, most importantly, about the same time that Goldman Sachs was issuing its report, the Economist Intelligence Unit issued its March report on Saturday, saying that there was a high probability of the Naira reaching 2,000 by the end of the year. So I don't think it's time for chorus at all. If you look at what we need to do, a lot we are not doing. I mean, take for instance, Egypt, sold assets to UAE to the value of $24 billion in the last 2 weeks. $24 billion. And the Egyptian pound has rallied from 70 to 49 pounds to the dollar as we speak this morning. So you can see such significant appreciation if we do the right thing. The central bank is working on demand, just ensuring that it squeezes liquidity, that it offers improved yields to investors to come in. And on the back of that, we hear last week how it is that we have probably gotten half of what we got the whole of last year, certainly in 1 month in Nigeria. So that's good. But there's a lot of work that we need to do, a lot of work. We need to deal with the supply side. So far, nothing is happening to the supply side. And I mean, for instance, significant increase in oil and gas production. I'm not sure anyone expected that about a year after this government came in, we will still be at the levels of oil and gas production that we are today. That is very, very poor. We need more dollars, not just dollars that we're going cap in hand begging. We need dollars that we earn legitimately. We also need to increase food supply. We need to increase food supply and reduce food insecurity. And simple basic things, by just grading roads to farming belts in Nigeria to ensure that harvest can come to the market. That way we can reduce the about 40% of farm waste that we suffer today, without necessarily increasing the land that you cultivate. So that's one. Secondly, we need to curb insecurity. We need, of course, to improve power supply significantly. There cannot be increased production without power supply. I am at a loss why this is taking so long to happen. Perhaps we now must begin to question the competence of the power minister. I hear complain all the time, but I see no policy thrust. I see no policy initiative aimed at improving power generation and power distribution. And back to the point you made earlier about skill, we need to improve, quality of education in Nigeria so that we can cut the amount of money that we are spending abroad to educate our children. We need to reduce significantly the about $1 billion in health tourism spent in countries like India and other countries by vastly enhancing quality of healthcare delivery in Nigeria. And there are a number of other things. These are just simple, basic things. I think the government needs to stop playing politics and begin to do what it needs to do to ensure that this economy can actually get back on its feet.
Yeah, well, a long list there, unfortunately, and none of that, no item on that list is new. It's just been there for a long time. But let's talk about the power, for instance. And I know the Minister of Power, we had sanctioning discourse, but as you said, that hasn't changed anything. Perhaps we should look at the state governors. We see what Abia State Governor has done. We know that there's been a reform of the Electricity Act to allow state governments participate more with generation and distribution. But do you think they're waking up to that, talking about state governments?
Well, I mean, that's another area of failing. Many people suggest that perhaps the tier of government to watch more closely the state governments, and I think I agree with that. I think what has happened in Abia, even if we cannot, in all honesty, attribute this to the work that a good governor like Governor Oti has done. I mean, geometric has been on the table for many years, and it's good that it is finally on stream and providing power to the people. I think the governments can do a lot. We were hearing a lot of noises from Kaduna State government, from Lagos State government, from Edo State government. But that's it. In Lagos, for instance, I think it's a pity that Lagos is not doing much more than it should do. The law, or the proposed law to set up an electricity market in Lagos is stuck at the State House of Assembly for almost a year now. That's a disgrace.
All right, Mr. Wagun, we certainly do hope that especially state governments will take up that responsibility, especially now they have the power to do that. They've been empowered by the law. Well, thank you so much for sharing your thoughts and perspective with us this morning, Chief Executive Officer of Businessday. All right, now let's head to the market. Yes, of course, we did see that over the weekend, and Mr. Ibokun just talked about it. Goldman Sachs saying that in 12 months, they expect that the Naira will go for about 1,200 to a dollar. Let's take a little bit of walk back and see how the Naira fared last week, looking at the movement on NAFEX. Let's have the Naira first before we go back to there. So in NAFEX, on Monday, there you have it, the Naira gained 19 Naira, 77 kobo to close at 1,905 1,597 naira 96 kobo. This was on Monday. This is what it closed with on Monday after it gained. So there was an appreciation last week, Monday, 19 naira 77 kobo. For Tuesday, there was the shortage of funds obviously continued, and then NAFEX weakened and lost almost all it gained on Monday. That's for Tuesday, and closed at 1,566 naira 43 kobo. And then by Wednesday, there was another drop of about 42 naira 6 kobo for Wednesday, and then it closed at 1,608 naira 49 kobo. That was for Wednesday. So we had a gain on Monday, but Tuesday and Wednesday it depreciated. And then for Thursday, there was another drop, but not so much. 2 naira 65 kobo was shaved off the naira. This is on the NAFEX window to close at 1,611 naira 14 kobo. So most of last week, we were around 1,600 naira. For Friday, which is what it closed with for the week, there was another drop on the naira. It dropped 4 naira 71 kobo to close at 1,615 naira 85 kobo. So in spite of all these efforts, and of course last week the CBN did say that there was an increase in remittances inflow into the FX market, but in spite of that, yes, this is it. So that's it. On Monday there was a gain. On Tuesday there was a drop. Gained 19 naira, dropped more than 18 naira on Tuesday. On Wednesday, it dropped about 42 naira. That was a whole lot for Wednesday. Then Thursday, there was another depreciation. That was slight, 2 naira 65 kobo. And then on Friday, it was 4 naira to close at 1,615 naira 85 kobo. This is on the NAFEX window. These numbers are gotten from Access Bank data. This is their trading number. So we know it's an official number. So this is what the market, the naira, is opening with this morning at NAFEX, 1,615 naira 85 kobo. And this is in spite of a lot of effort. But I guess, as Mr. Ibogun said, perhaps the government should also look at the supply side of FX into the country. Then the squeeze in the FX market might have more relief. So just before we head back to Sunrise, let's do the market numbers and see how the NGX fared last week. It was positive. Last week was positive. Good news all through. 2.61% is what the market gained at the NGX, and sustained that 101,000 level that it recovered last week. Equity cap went up to 57.293. Remember, this is in addition of Transcorp Power. They brought 1.8 trillion naira to the market last week, to the market cap, and even surpassed that by the close of trade last week. A good one for that company. And let's look at the counters for last week for the NGX. There you have it. The volume was up more than 14%. Value 218.7% added right there. We know that we started the week at about 55 trillion naira and closed at 57 trillion naira. So even with the 1.8 brought in by Transcorp Power, we also had some positive movement in the market. More than 51,000 deals were closed in the market at the NGX last week. But when we look at the sectors, there's a lot of red right there. Banking dropped 1.40. Consumer goods also went down. Industrial goods was able to stay up there, 1.50. And then insurance, a lot of those penny stocks, which had started gaining the interest of investors, seem to have lost it. Profit taking on it last week. Oil and gas is staying quiet for about 3 weeks now. It's staying quiet. I wonder what is going to bring that counter back up. Top gainers were Transcorp Power, gained a lot. Started with 240 naira and closed over 300 at the close of trade last week. Julie PLC, International Energy also was right there. Then for the top losers, Guinness, ETI, NEM, Insurance were there. For the smaller market, that's the NESD, it was a negative at the close of trade for the NESD. There you have it, more than 5% in the red, and the market cap stood at 1.46 trillion naira after 5 days of trade. The activity chart right there had value in the red, volume in the red, 80 deals, 113 stocks traded for a total of that. So that's how the market looks like. The good thing is we're starting a new week, so if you see an opportunity, you might want to take that opportunity and perhaps make some good out of it, maybe make some money out of it. It's all up to you. But we know that the federal government is aggressive about raising funds and mopping up. The CBN is very aggressive about mopping up inflation. So we see the yields at the fixed income market looking really attractive. Certainly 1 p.m. we'll give you that. We still have tomorrow also. We can also talk about that. That's what's going on in the fixed income space. Yields are going up right there, getting close to inflation rate, making it attractive for investors. You may be interested. All you have to do is stick right here on Business Morning or Business Incorporated. For now, it's back to the Sunrise Daily Studio.